Hey guys, and welcome to CT Guides. I'm your host Theo, also known as Tao Cruz, and today we'll be doing a lesson on baseline indicators and TradingView. So before we talk about the indicators, I'm going to talk about the chart view color theme and how you should set it for the best results. So by setting your background to grayscale, it's a natural base color that's easy to see, and it provides a certain contrast between the candles and the background that you don't quite get with other colors. By setting your candles to simple black outlines and red and green fill, you get a pretty nice looking chart. And for your indicators, you're going to want to use colors like yellow and white that are really easy to see. And as an example here, I have an ADX indicator right here, and you see the yellow, the white, the green, and the red. I mean, those are probably going to be your best four colors that you're going to want to use on your chart. They're standout, they're easy to see, they're not going to blend in with any other color that you're using. And if you guys want easy access to this color scheme, I've included a link in the description below. Once you get there, click on this little share button right here, and then you're going to see a little make it mine. It's a big blue button. You'll click that and it will load into your trading view. And then once it does and you get the colors right here, what you want to do is you're going to want to save it. So right click on the page right here, go to settings, and then go there to your templates and then save it as a new template right there. So our first indicator is going to be the G channel. And have it up right here, and we'll include a link so you can get easy access to it. So it's a dynamic approach that enables faster trend identification, early reversal detection, and precise visual confirmation when a market is in range. So when we're using this indicator, we're going to consider ourselves bullish when we break the upward channel bounds. So as you can see here on the chart, most of 2022 we were really bearish. We were in a bear market, and then beginning of 2023, right here in January, we break through here out of this bearish channel upwards, and that's a bullish signal right there that you should go long. Now for the bearish side of things, we're going to break downward to the channel bounds. And example of that, 2021, super bullish for Bitcoin. We were able to reach an all-time high. However, in May, the market had a contraction right here, and as you can see on the daily chart, we have our channel bounds right here, and then it breaks through that, right? It breaks structure right there. And then it does return the form, but then ultimately, we reach an all-time high right there and then go into a deep bear market. So our next indicator is the McGinley dynamic. In the background right here, I have it up here. It's just one of the basic indicators from TradingView. So the McGinley dynamic is an indicator that tracks the market better than your basic moving average. Its formula allows it to adjust for market speed shifts and price separations, allowing it to present clear and comprehensive moving average lines. So when the McGinley dynamic line crosses from below the price line and is upward sloping, it's often interpreted as a bullish signal, and traders may consider entering a long position at that point. So as you can see right here on the chart, in the new year, right when things turned bullish, 2023 in January, see how the McGinley dynamic line is going under the price action, and also you can see it's kind of like upward sloping right here. That's a bullish signal. That's what a bullish McGinley dynamic looks like, and it keeps on going up here. It has some minor retracements here and there. But overall, it's upward sloping, and the line is staying underneath the price action. Conversely, when the indicator crosses from above the price line and is downward sloping, it's viewed as a bearish signal, and you may consider entering a short at that point. So in late 2022, right here, we can see that generally speaking, the McGinley dynamic stays kind of on the upward side of the price action, and it's downward sloping. Look, we can see that pattern happening over and over again. until we get to 2023 right here when we flip bullish. And I'll zoom out right here just so you can kind of see the full aspect of how that went over 2022. See what I mean? Like there's the big apex right there, downward slope, and then it just kind of trickles down. Next indicator I'll talk about is the FantailVMA. And this indicator is a combination of a moving average and ATR, an ATR meaning average true range. And the FantailVMA stays relatively close to price, and at the same time shows clear trend of an asset or a stock. So using this indicator is pretty simple. So it's a bullish indicator when the price action is above the FVMA line. The white line right here, and this is back in 2023, beginning of the year, and kind of when the market flipped from bearish to bullish. And as you can see right here, the FVMA line stays right under the price action, and it generally keeps that trend as we continue the bull market. However, on the bearish side of things, the price action is going to generally stay under the FVMA line, and as you can see in late 2022 here, generally speaking, the FVMA is kind of staying over top of the price action until the beginning of 2023, when this trend shifts and then it starts staying underneath it. Our next indicator is the T3 average, and they are adaptive moving averages, meaning they track time series more aggressively when making large and volatile moves. And similar to the last indicator, we're going to have a bullish trend if the price action is staying above the T3 line. So as you can see, beginning of 2023, market flips bullish, and the price action starts to stay under that T3 line. On the flip side, if a bearish signal would be the price action generally staying under the T3 line. So as you can see here, late 2022, generally T3 is staying on top of the price action until 2023, and then we see trend shift. Starts to be under the price action. So our last indicator for today is the liquidity heat map, and it's an indicator that plots a heat map of resting liquidity above and below swing lows and in multiple time frames. So the darker the color is, the more liquidity is going to be lying there. As you can see right here, there's a lot of liquidity right here for the shorts to kind of grab, and things kind of turn bearish from there. On the flip side of that, if we go to Bitcoin's all-time lows, we can see there's a lot of green, and it gets kind of dark down here. Makes a lot of sense. So to summarize, we're looking for shorts. We're going to be looking for these zones that are kind of dark red like that. And for longs, we're going to be looking for these kind of green zones, darker the better. And additionally, if you see a bunch of zones together, like these red ones up here, or down here, you see a big cluster of green ones, that would also be a telltale sign that there's a bunch of liquidity there. Well, that does it for today's videos, guys. All the indicators I used today, I'm going to include a link in the description below, so you're going to have easy access to them, as well as the color theme I've been using. And if you have any questions about how the indicators work, feel free to drop a comment below, or just send me a message on Discord, and I'll get back to you as soon as I can. See you on the next one.